This is a quick update to thank you for building our number of patrons to 70 and growing on patreon.com/ReluctantPreppers.
Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/ReluctantPreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have with us again a returning guest, Lynette Zang. She is the Chief Market Analyst at ITM Trading. She's here with us again to talk about current market conditions and some timeless principles that answer your viewer questions that you submitted. So we're just delighted for your joining us again here on Reluctant Preppers, Lynette.
Well, it's always a great time to be here, so I'm happy to be here, Dunagun. Thank you.
We submitted for your preview some of the questions that our viewers have submitted just today ahead of our interview, and there were a number of themes that emerged from that. I'd like to treat those themes with you if we could. Some of them touch on things we've talked about in the past, and some of them may be brand new. But our topic today will be driven by these viewer questions, because this is what people are asking about. One of the things is pretty interesting, and that is in recent geopolitical events, we've seen what some people say could flare up and continue to grow into a full-scale trade war between the U.S. and China or other countries. There was Trump enacting tariffs against some Chinese imported goods like solar and other things, and now that China has some people say retaliated, some people just say they're adjusting to their own domestic consumption being in a slump as well. But at any rate, the question from Debs Bo was, what is the probability of the escalating trade wars leading to retaliation by China in the way of treasury sales? And I interpret that to mean they're historically being a major purchaser of U.S. Treasury bonds, and how this will affect the credit markets in terms of freezing. Because you've certainly talked to us in the past about lack of liquidity that can happen when you lack of trust and that sort of thing. So if you don't have a ready buyer, so what is your view of the impact of trade wars leading to retaliation on treasury buying by the Chinese?
Well, I actually think that is a great possibility. I mean, that is a huge weapon that they have against us, particularly as we're running massive deficits because of the tax cuts and the repatriation and all the different things that have been going on, and all the new programs that President Trump wants to, enact, and the military. So I do think that is actually a pretty big threat. And right now they seem to be going, tit for tat. And I don't know, it looks like a schoolyard to me. I hate to say that, but it kind of does look like a schoolyard. So, yeah, I think anything could happen with that. Absolutely. And I think Russia just escalated selling off a lot of treasuries. And, they're quite tight with China. So that could be a premonition, perhaps. But yeah, I think it's a possibility.
It's kind of interesting because in the spirit of preparedness or having a preparedness mindset, a lot of people have talked about paying off your debts, paying off your mortgages, owning what you have, so that basically you're not beholden. It reduces one more chain that somebody else can choke you with. It gives you more freedom, more independence. But as a country, we haven't been doing that for a long time, and so it sounds like we want China to be our debt buddy when it's convenient for us to be able to do this kind of reckless, drunken sailor spending. But when it comes time to then say we don't like the way you're playing fair or not fair in trade practices, it's hard to have it both ways. Could you take us a little bit closer, zoom in on what the scenario would play out like? Let's just imagine, do a thought experiment and say, okay, so China gets upset with us for trade. So they not only retaliate with some trade embargoes or whatever, but they also actually say, well, we're going to stop buying your treasuries. In fact, we're going to sell the ones we have because we got better things we can do with our money or something.
Okay. So what would happen if they do that? And I'm watching what's happening with Russia right now, because if there's a lot of bonds that are sold off, then that would put upward pressure on the interest rates, because there would be more available, because those would also be what's called off the run or secondary market. So when we've seen these sell-offs before, because this is not the first time that we've been dealing with treasury sell-offs by foreign governments, then somebody has to absorb them. We don't necessarily know exactly who is absorbing them, because they can use a proxy. Yeah. But right now, too, right, they could use a proxy. So
I think Rob Kirby has talked on our channel a couple times about how he's like, when there's this, looks like it's going to be a failed bond auction, and then suddenly, I don't know, Switzerland or Bahamas or somebody will step up and go, okay, we're going to buy all your treasuries. It's like, what? You're going to buy a 17th of the whole world's GDP worth of treasuries or something?
Exactly. Yeah. But it's actually even usually, don't hold me to this, because obviously I don't have the data in front of me, but I believe that Ireland owned now Ireland was in deep doo-doo just a few years ago, and yet they were buying and owning so many of our treasuries that it was completely illogical when you looked at the level of treasury debt that they owned. Right. So I mean, it really is such a huge game, and what the Federal Reserve is attempting to do is raising the interest rates, which it's interesting, because the news media say that they're raising them because the economy is so strong.
You bet, yeah.
But the Fed itself says because they need some wiggle room to lower them in the next crisis.
Right.
So, they want the rates to go up, but they don't want them to shoot up too much, because what happens if they do? All of those derivative contracts, trillions and trillions and trillions in derivative contracts, I think somewhere north of 4%. So when I looked this morning, we were at about 288. So they're in this trade war issue between the U.S. and China. There's been a flight to safety into unpayable debt. Yeah, that makes a whole lot of sense. But presumably that's what happened since the interest rates dropped down. But just the reverse would really happen if they were overwhelmed.
Okay,
with a huge amount of dumping.
Okay, so if a bunch of foreign sellers like China and others, Russia and so on, were to dump a significant or material amount of U.S. debt, it could force up the effective rate, and then that would require some buyer to step up also and sop up all that.
Well, if it didn't, then the rates would keep going up, and then we wouldn't have to worry so much about the treasury debt. We would have to worry about a derivative event.
Okay. So it could really precipitate it could precipitate a collapse or a lockup of the debt system. Okay.
Right, because what's the opposite of debt is credit, right? The whole system is based upon the never-ending ability to grow your credit, grow your debt. And we're at the end of the system. And we were just having a conversation about this. I feel like the system is made out of hand-blown glass. It's gorgeous, and if you hold it right, it feels like solid. But boy, if you just nick it just in the right way, it's so fragile, it could just come apart. And really, that's where we are. We're at the end of this system. There is not one doubt in my mind. I have been watching pattern shifts in earnest. Every week, it seems like I'm seeing a new major shift that's coming out since last October. So for almost a year. How long do you think we can have pattern shifts before the one that's really visible occurs? I don't know. I don't know the answer to that, because I don't know what other tricks the central banks, I don't think they know what other tricks they have in their toolbox yet. But, just all the surprises that they pulled out in 2008 and they've continued to use, makes me feel as if they've really used that up. So this next crisis I mean, where is everybody else? Everybody else, not everybody, but most other countries, like our major trading partners, like the EU, is still in negative rates. They're just starting to raise rates. What happens in this next crisis? The rates that they can control, they push all the way down. But the market, presumably, determines the rest of those rates. And if you have a large enough group moving in one direction, I think it could overwhelm the system. Credit could freeze, and we know what that is. We lived through 2008. It wasn't that long ago.
Yeah, Gregory Mannarino has talked several times in the past month about this so-called red line in the sand, where the powers that be seem to want to manage the interest rate not to go above, that they're not comfortable with it going significantly above 3%, like 3.1, 3.1 something. But if it starts hanging out above that, there's suddenly this mysterious emergence of a buyer that comes in and just starts buying up all kinds of treasuries that pulls that rate down below about the 3% line. And right. He says we need to not get too hung up on the exact numeric level, because it also depends on the dollar's relative strength. That if the dollar becomes stronger or weaker, that kind of moves it biases that line a little bit. But basically what you're saying is, if these external forces really just start moving the interest rate beyond that, we could be the whole system could be in a world of hurt because of the derivative exposure.
Exactly. And I agree with him. I think, and I could be wrong because these things are really opaque, but I think that somewhere north of 4% we would have a triggered event that they could not hide. I mean, there's all sorts of tools.
Yeah.
Understand, people always think that nothing happens until there's something that's like hugely catastrophic.
No.
And what they miss is that it's like a game of Jenga, right? You take out all of these pieces until the last piece, and then everything implodes. And that's really where we are. There are a lot of pieces that are gone.
That are missing.
That are
yeah. And as you mentioned in passing earlier, it's like it's almost incredible, the variety, the ingenuity that's been brought to bear. It's like, what, you got that arrow in your quiver? I remember, it must be 4 or 5 years ago, when the dollar was just like moving terribly overnight. It was just terrible, and then suddenly, the Bank of Japan just stepped in and bought dollars like crazy and just rescued it. It's like, that was coincidental. So there seems to be one thing after another that can be pulled out of thin air to prop up the Jenga pile.
Because of the fiat system, because the system is just based on, really lies. I mean, I hate to say it, but it's absolutely true. And, and when you stop and think about what was their quiver? More debt and more leverage. That's all bankers know. So, they did it in QE form instead of in this form, or they do it in that form. But really, it's just the same tools. Interest rates and debt levels. Those are their tools. And that's really why we're so close to the end, because those tools aren't really working to create a sustainable recovery.
Yeah, it's not about
health.
Right, yep.
And that's really what the problem is.
And it pushes us, as you've pointed out in the past, and Gregory has, and Rob Kirby has, it pushes us closer and closer into a more and more violently unstable situation, like your blown glass analogy. So I guess that leads to the next mega theme in our viewers' questions, is about topics surrounding a potential collapse or a reset. And you've talked with us in the past about the potential for a not only a monetary reset, but basically a revaluation of like precious metals, and a revaluation of all debt, like mortgages and other things like that.
Everything.
Yeah.
Mm-hmm.
And so this question is related to that. It's saying, we've talked about this one too, but this is kind of really brings it down to the human family level, is given a global reset, how will people acquire auto financing, college financing, and mortgage financing?
Well, you're going to have stellar credit. So, I mean, honestly, not everybody suffers immensely during these transitions. Even in Venezuela, where 90% of the population are in abject poverty, so they will not be doing those things, 10% are not. So I think the division, which we've been seeing evolve for a really long time anyway, of that income inequality piece, it's going to get a whole lot worse. That's what the sharing economy is about. So, really, you won't own anything. And when you look at education was another way for the government to create a bubble, because students are graduating now with mountains of debt, and they're not able to get a job, a middle white collar worker job in the area that they studied. And so they end up as, not that there's anything wrong with it, but, if you have a degree in economics, do you really want to be a barista at Starbucks? Mm-hmm. Right? But that's what they really want us to accept, is this sharing economy. So all of the debt will reset. And mostly what it'll do, it'll reset from your individual hands to somebody else's hands, unless you're prepared. Okay? You want to have a level of gold, so that what happens on average, and the clock is ticking, so I don't know whether we're going to see this in Venezuela or not. We'll see. Time will tell. But on average, 9 months after a planned reset, the mortgages, your fixed rate debt also gets reset. And you have a window where you can pay that off, right? If you have gold, you'll be able to do that. If you have savings, I mean, that's what gold and silver are really, is their savings. And so if you don't have that, how are you going to pay that? You're not. So that means that you're going to lose that asset. The other part is, even if you have that real estate paid off, it's the property taxes that start to go up, because that's how states and municipalities generate income. Right. So you have to have, your barterable gold, but a lot of people have a tremendous amount of silver, so that could be used. But those are the tools that you would use to ensure that you have the ability to pay those off. And it will only be most likely the very wealthy that will have the ability to send their children to, generally speaking, for a higher education. I think it's going to get pretty even more divided than we've seen it in this country. There are other countries that have a stronger caste system. Yeah. But I don't think that we have that as strongly here. I think we're going to have it.
Yeah, you're making me remember all kinds of things we've had recent guests weigh in on. I know Wayne Jett, author of The Great Depressions Then and Now, The Fruits of Graft, talks about the elite, financial elite, doing all the things that have the earmarks of driving us towards a two-class system, basically a very small elite class and then everybody else, and the destruction of the middle class. I guess Wayne Allen Root we've also had on, and he's talked about the murder of the middle class. And also something you just said made me recall, it'll come back to me in just a minute, but just that whole thing about having assets that, like you said, savings, that aren't in the control, in the hands of the elite. So if your savings are in a bank account denominated in fiat dollars, or in a 401k or 50 whatever plan, or any 528 plan, or any other of these plans that are off in the controls, but all denominated in the fiat system, they are subject to all kinds of manipulation and taking.
Because you may perceive them as savings, but they're really just fiat money products. They're just a product, and we're witnessing they create new products all the time out of thin air, and then they sell them to you, and then they charge you fees for managing them. I mean, it really is just, it's mind-blowing when you really understand the structure of the system, but then you also understand its fragility, because as this income inequality has grown over the years, and that really did start in earnest, used to be a worker's wages. If he produced more, then they got paid more money. Well, that shifted once we went into the pure fiat system. And from there forward, it's so obvious. While productivity, you're getting more and more out of your workers, but their income is not keeping pace with that.
Right.
That's all flipping by design. But you get to a level where it's like Tesla. Okay, well, what did they do? They just announced that they're firing 9,000 or 9% of their workforce. But don't worry, it's not the guys on the line, so the lowest income. And I'm pretty sure Elon isn't going to be fired. So who did he fire? The middle white class, your middle management, the middle class jobs.
Yeah.
So, at some point people get frustrated. That's why Trump was elected, because we're getting frustrated in this country. That's why we see the elections in Italy to the anti-establishment that threatened the euro.
Yeah.
But, we see Brexit. We see the Arab Spring. That's what happens when people get hopeless. They start to make choices they wouldn't otherwise make. And if the people at the top are so greedy that they've taken away the American dream, right, so that you can't strive for it because you're never going to get there. You don't even own the clothes on your back. Somebody else has the title to them, where you're just leasing them. I have an issue with this. I do.
Right.
I have an issue with this.
So you've touched on that, and we're talking about this sort of this class divide. There's another question related to this from Wesley Segura, who says, right now we have a wide margin between the rich and the poor. In a reset, do the rich still stay rich? How is the new currency dispersed?
So that's a great question. The answer to that is typically yes. And even if you think about the Depression in this country and you think about Seabiscuit, that racehorse, and the pocket was $100,000, which during the Depression, that'd probably be like $1 trillion today. So yes, there is, wealth never disappears. It merely shifts location. So the wealthy, typically, they have the gold, they have the silver, they have the fine art, the rarities, they have the real estate, they have dynastic wealth that survive these transitions. It's typically the middle class and the lower class that do not possess those. And so, that's why you end up with that great divide. That's what my work is about and my strategy is about. Wealth never disappears, it shifts location, so be in a position to have it shift your way. Be in a position that when the reset happens, if you have, I'm just going to throw this out there, if you have a $90,000 mortgage on your property, make sure you have 10 ounces of gold or the equivalent in some kind of form of savings, so that when you get that letter from the bank that says we're going to reset your mortgage if you don't pay off the balance by this date, well, that's what during the reset anyway. So here you have gold goes up like this. You take those, you probably wouldn't even need 10 ounces then. Maybe you only need 1/4 of an ounce or whatever. And bam, you pay that mortgage right off. But since most people won't be able to do that, there's a tremendous amount of real estate that's likely to come onto the market, especially in commercial income producing real estate. In Japan, commercial real estate dropped 95% in the early 90s. This is not that long ago, people. And it still hasn't fully recovered because obviously it was severely overvalued and they've been in a deflationary stance ever since. However, now you've got the real estate that's doing this. You've got the gold that's doing this. When we see this pattern of accumulation, that the smartest guys that understand what's going on, they've recognized that undervalued circumstance and they've built a floor under it. It's called the cup formation. That's what tells you that you are most likely somewhere near a bottom. If you ever get in on the very bottom or out at the very top, man, that's just luck. All I'm ever doing is shooting for somewhere near the bottom and somewhere near the top. And if you just watch what the guys that understand this stuff are doing for themselves, and you emulate, and you can. It's just, that's why I follow patterns, because the patterns really show you the evolution and help you determine this is what I'm going to do. And that's what the strategy is all about, is having that wealth, maintaining your current standard of living. But honestly, the other part of that is to grow your wealth so that on the whole other side of this mess, now you have this dynastic income producing wealth that you generate income for yourself the rest of your life. And then, dare I say it, you have it set up in such a way that, you can't outlive those assets. You have wealth that you can pass on to your heirs.
I want to press in on this because we've had quite a lively interchange with people writing comments about saying, "Oh no, wealth absolutely can be destroyed in a market collapse and that kind of thing." And I think maybe looking at too narrow of a view when they say that. And I've been thinking about that a lot. Certainly, when you take the viewpoint of if you have a savings account and the currency gets drastically devalued, you have less purchasing power all of a sudden. Or if you have a big equity holdings, you're either holding stocks or bonds, and then suddenly that collapses, then you're the loser. But like Wayne Jett was saying, whenever you look at one of those big collapses, there were people who were positioning themselves on the other side of that who benefited hugely from that, who fortunes were made. And in fact, those weren't happenstance; those were set up. He describes in excruciating detail how a lot of those collapses were engineered and how the elite positioned themselves to benefit handsomely from those. But the other key distinction that I think you've made earlier is that if you consider your wealth to be in cash and savings and a retirement account and your current employment income, you can lose all of those or they can become devalued. But if you have your wealth in solid assets like productive farmland or collectibles or precious metals or things that have enduring value and use and function, then and that's where you see, you've got the Ted Turners and the Bushes and so on, who have these thousands and thousands of acre ranches, in whether it's in Texas or whether it's in New Zealand now is the new place for these people, the uber rich, to buy their big ranches. So they've got assets, and those assets are going to be like survive and persist across any kind of a monetary fluctuation either way.
That's why dynastic wealth is defined as wealth that lasts in families at least 300 years. So the Queen of England, that's dynastic wealth that's been passed down through the generations. It survives this. Now, your wealth may evaporate if you're in the stock market, but every week I do an insider trading piece showing you that the insiders are selling out and capturing their gains. You may be still sitting in that overvalued stock, but they've gotten out. It's in the Wall Street Journal. You can Google if you own a stock and you want to see what the insiders are doing,
sure.
Just Google it. NASDAQ does, I always use the one from the NASDAQ because I love those bar charts. They're really, really clear. But just put the stock name in, insider trading, NASDAQ, look and see what these guys are doing. That always happens. That those that are in the know, those that are driving this, that understand what's happening, they're positioning themselves to succeed. They're locking in their gains. That's what they're doing. They're locking in their gains.
This seems really slimy too, because like when these major market collapses occur, you have people on the news and in the major financial publications, they'll say $1 billion of wealth disappeared overnight. Like, oh, this terrible thing happened, because you're looking, if you get close enough to it, you're looking at just everybody's 401k accounts. You go, yep, it all went down. Everybody's went down. They're not backing up and going, except for those very wealthy people who bet on the other side.
Their clients lost $1 trillion, they made $1 trillion.
Right.
Oh my goodness.
Right.
And, and just something on that, because I was so excited. It's not often that your work gets validated by the SEC, But the SEC just recently validated my work because they've noticed some manipulative insiders trading. So the insider, just to define that, are the boards of directors, the CEOs, the CFOs, the guys at the top of the companies that are running them. And wow, the SEC has noticed some manipulative insider trading that really passed the risk and costs and everything to the public. Shocker. Now, will they do anything about it? No. They also admitted that they haven't looked at their rules in insider trading in at least the last 10 years. And yes, even though there were several passages in the Dodd-Frank that specifically prohibited this kind of behavior, they've never been enacted. And it's only been, 8 years. 8 years. I mean, certainly that's not enough time to enact these things, which are now being dismantled. So they won't have to worry about it.
The other topic related to insider trading, which probably I'm thinking is not published in the SEC reports or the other, because typically insiders are company insiders, but
correct.
We've heard from Ron Paul and from others that it's actually in the law, it's legal for all members of Congress to do insider trading, like the Al Gores of the world and everybody when they were in that role, because they get all kinds of advance notice of things that are going to get approved, things that are going to get permitted, things that are going to get, where mergers are going to be whatever, and they can act on that, they can trade on that information. And
isn't that interesting?
Anyway,
yeah.
You mentioned.
I thought we're supposed to be represented by our peers.
Yeah, that's right. You mentioned in passing about a few minutes ago about the value of gold going up or silver going up.
In terms of the currency.
Yeah. There's a question specifically related to that from Jeff Nimps. Was submitted. Do you see any scenario where gold rises and silver does not?
Actually, no, but the level of the rise in silver to gold, especially through resets, silver does not keep pace with the rise in gold because the reset is performed by revaluing the currency against silver. So silver too would rise because there's demand for both gold and silver. We talk about functionality. Yeah. There's demand for the physical metals across the entire global economic spectrum. So there's always demand. Sometimes more, sometimes less, but silver does not perform as well through a reset. But you need it. It's part of the preparation and the planning. That's what you're going to use for everyday kind of purchases.
So you're talking about the utility of it not only as an industrial commodity, but also as for small-scale transactions where you need something that's of human scale, not the big stuff.
Exactly.
But other people have argued that the historical gold-silver ratio is so far out of whack right now that silver is compared to its typical valuation in comparison to gold, relatively cheap compared to gold as compared to the historical average. Do you see that kind of counterbalancing what you just referred to as far as gold's monetary performance during a reset as opposed to silver?
Well, actually, no, because what you're referring to it is in terms of fiat.
Yeah.
And again, so that kind of makes you think of it like a trade. And for me, it's about the utility and the functionality of it. And also, yes, the gold-silver ratio is out of whack, but like in Weimar, Germany, it remained out of whack. It wasn't. It was nice and steady, and then it reached a point in their hyperinflationary phase where it looked more like what it looks like, that difference looks like here. I believe it was 160 to 1 versus, 15 to 1.
Right.
And but it stayed there.
I see.
So because that's where gold as and some people don't like that I'll call gold the primary currency metal versus the secondary currency metal. And I don't really want to diminish silver's role in the monetary system because it has a function to perform. But that's the way I look at it. Because what are you going to do? Convert it back to dollars? Of course not. Not in a hyperinflationary, unless you needed those dollars to pay your property taxes. Then, yes, you're going to convert them back to dollars. but gold just performs that function better than silver does.
This is a related topic. Gary still submitted the question. Gold and silver now derive their price from the paper markets. I guess he's talking about the spot price on gold and silver
Right.
being so strongly influenced by the paper trading on the COMEX and so on. Because of this, will gold and silver plummet along with all other paper assets in the short term? So in the case of a market collapse, does the price, the spot price of gold and silver follow for a while?
Yes, absolutely. And that is a great question. And if we look back in 2008, but that's also where you will see the physical markets divide from the paper markets. In 2008, we saw the spot market go down. I think it was like 32 or 34% as the rest of the markets tumbled. But availability on what you could get your hands on in the gold and the silver markets also started to dry up because people were flying to the safety of the physical. So the premiums exploded in both the, just your barterable, your bullion kind of products. The premium exploded, even though it kind of followed the spot market, but that's where you have that rarity factor that comes in. And in the collectible market, that's when they made the highs, which they still haven't breached yet, but that's when they made their highs. So, they can do anything that they want to with the spot market, and that's what people look at and go, well, certainly even though every single day I'm reading about how they manipulated this and lied about that and paid a fine for this, certainly if they tell me that that's what gold is worth, that must be right. They would never lie to me. Well,
the good news is you can get it for that currently. The question is
currently you can.
Right.
It's a gift. I know. I ordered both gold and silver today.
So let's look into another thought experiment. The Motivational Mind is a user who submitted this question. After gold revaluation, what hard assets is Lynette looking to convert her gold into? More fish to swim with in your floating ponds, right?
Oh my God, that's so much fun! I'm telling you, if you ever get here, I'll have to give you some goggles and let you go swim with the fishes.
We just bought our own goggles. People know that we just got back from vacation. We were actually visiting Bermuda, and I have an upcoming video about the historical economy of Bermuda. It makes fascinating study in preparedness or lack thereof. Anyway, we'll get into that later. But we did some snorkeling. We bought prescription swim masks. So.
Well, then you'll have to bring them.
Yeah. So give us some enlightenment on your thought process of, so there's this major upset, a major revaluation event occurs. What then?
Okay. Now, when we see that pattern, that cup formation occurring, and we want really good assets that can survive this mess. So what I'm going to look at is commercial real estate, farmland, both of which are ridiculously expensive right now, severely overvalued, but I think it's going to look very similar to Japan. I also like rights quite a bit. So air rights, water rights, wind rights, oil rights, mineral rights. So I like rights as well. And then also there are the income producing assets like what, and this has already been happening, but it'll come back on the market. Anything that's done with leverage is going to kill you into what we go into. So all of that's coming back on the markets. But a lot of cities are being forced to sell their income generating, like, parking lots, parking meters, freeways, harbors. So there's going to be a lot of availability. It really depends on, who you are, what your goals are, what you have to work with. Like, I consider myself really fortunate because I happen to have, two very, very brilliant young women that are ambitious, and so I've got them to rely on, because I guarantee you I'm not really going to, if I ever stop doing this, which I don't think I will, but if I keep doing this, I won't have time to do anything else. And if I ever stop doing this, I'm probably not going to feel like, managing property. But I have my daughters and they will. So we have to just kind of, look at what we have to work with and and what would really work the best for you. And it's not time to determine that yet, because I don't know how long it's going to be before we then have to make that choice. But if you're executing the strategy with us, then these are the kinds of things that you'll actually know about and know when we see those patterns.
And we're getting short on time, but I wanted to give you an opportunity to give us a quick update on, you mentioned the last time we spoke with you, you had just put in your floating forests or floating islands on your pond in your backyard.
Floating islands.
Yeah.
Oh my God.
So just today you were mentioning that you've started swimming with the fish now. That was what was it? It was realizing a dream of yours that you had talked about in the past, in our past visit with you.
I'm going to tell you, I have wanted to put this in since 2010. So yeah, it's definitely a dream come true. And it is the coolest thing ever. Oh, you were just snorkeling. So it's like I get to do that in my backyard. And I'm trying to train the koi and they come and they eat now. They know when I bang the rock on there. But hopefully as time goes by, I'm hoping to actually train them to hand feed them so that they take the food from my hand so that I can go in the water with them. And it's like so cool with the snorkels because they're all just swimming all around you. The islands are growing out. I mean, it's really so magnificent.
Do you plan on adding any edible fish like tilapia or anything?
I have a tilapia pond, so I don't plan on adding them in there, though I would like to do some crawfish, but I don't plan on adding them there because tilapia have a tendency to be a little aggressive, I'm told. So I actually have tilapia in 2 different ponds, but I'm not going to put them in there. There we're just going for, although I did put sharks in, but they're algae-eating sharks, the high fin sharks.
Okay.
And I couldn't see them. They're hiding from me, so I couldn't see them. But they're in there.
I just thought in the spirit of urban farming, you've been mentioning you're feeding the fish. I wondered if the fish were going to feed you at any point. So, okay. Sounds like you've got the tilapia in a different pond. Okay.
The tilapia in a different pond, and yes, the fish will feed me. Maybe someday. I've been waiting for that since 2013.
So, your tilapia aren't harvestable size yet?
I don't know. I can't see them.
Oh.
I want to put a light in so I can see.
Oh, okay. All right. Well,
I would imagine some probably are. I've had them in there since 2013.
Maybe there's like one left because he ate up all the other ones.
I see a bunch of them when I feed them.
Oh, okay. All right.
Right, and then they come eat the food. So no, I can see them there.
Cool. Well, do you want to take just a minute to let folks know what they can find, how they can benefit from contacting you? You've been mentioning a lot of references to helping people.
Strategy really, I've studied currency since '87 and saw those repeatable patterns. So I developed a strategy for myself, but we employ it here. So we all execute this strategy. You don't have to do it, but it's based upon repeatable patterns. Everything we do here is with physical gold and physical silver. So unless you were to do this inside of an IRA, which frankly I don't personally think is a great idea these days, but everybody's got to do what they're comfortable with, but you would take physical possession. And so if you call ITM Trading, and you can certainly find us itmtrading.com, we're on YouTube, ITM Trading, and there's all sorts of links. But I've got this really whole big group of very, very talented and bright precious metals consultants. And they can help design the strategy specifically for you, including what you do with your goal. It's all encompassed.
Including an exit strategy. Okay.
Right. The exit strategy as well. And we plan on, being around to help you execute that as well. But that's what we're about.
Well, we've been speaking with Lynette Zang. She's the Chief Market Analyst at ITM Trading. Today is Tuesday, June 19th. Is it the 19th? This is the 20th.
Is it? 19th.
19th. And
it's my 16th year anniversary here on the 28th of this month.
Oh, congratulations.
16 years.
Well, you've certainly shared a wealth of experience and knowledge with us, and we sure appreciate every visit we've had with you. And this one, I think, will bring a lot of interest because we've been talking about the questions that were of interest to our viewers. So, Lynette, thank you, as always, for joining us here on Reluctant Preppers.
Oh, it's my pleasure, and I will see you the next time. Be safe. Bye.
Thank you.